63 hotel properties totalling more than 710 million changed hands in Ireland during 2015. In addition, 11 hotels totalling 55 million were contracts signed at year-end, and 10 hotels totalling more than 30 million were sale agreed. This is a remarkable outcome for the year, considering that these figures do not include the loans associated with another 40 hotels which changed hands as part of loan portfolios last year. We are unlikely to see the same number of individual transactions as in 2015 this year, on the basis that last year's numbers included a portfolio of 7 hotels in NAMA's Crystal collection, as well as 5 Bewley Moran hotels and 5 Jury's Inn Irish properties that were sold as part of larger international portfolios. The third largest hotel in Dublin, the internationally famous 4-star Gresham Hotel on O'Connell Street, will shortly be offered for sale and is sure to attract very strong interest from the international hotel investment market. As the NAMA wind down is accelerated throughout the year, we expect to see further loan sale activity occurring, which will include loans associated with various hotel assets around the country. With a greatly reduced number of hotels remaining on NAMA's books or on the main bank's balance sheets, we expect that several of this year's transactions will comprise retrades of hotel properties whose loans were sold as part of portfolio loan sales over the last number of years. We're not anticipating portfolio transactions to the same degree as in 2016, with most hotels likely to be traded individually. Following on from their successful fundraising last year, we will see continued buying activity from Dalata and other specialist and acquisitive hotel groups such as Great National, Tifco and Ainua during 2016. We also expect to see many of the indigenous Irish groups taking the opportunity to expand their Irish hotel interests by adding 1 or 2 hotel properties to their existing portfolios this year. One of the key trends in this sector this year will be a renewed focus on development in Dublin city centre, with a notable increase in the volume of new hotel development and extension projects entering the planning process, as well as a number of new hotel schemes commencing construction. Many of the promoters and developers looking at Dublin are particularly focused on the provision of budget-style accommodation. While there is very strong demand for hotel sites in the heart of Dublin city centre, competition for more profitable end uses such as offices and residential will make the acquisition of hotel sites quite challenging. We therefore expect to see the next wave of hotel development in the capital largely occurring outside of the traditional Dublin 2-4 stronghold and spilling over into neighbouring locations and postcodes such as Dublin 1 and Dublin 8, which will benefit greatly from improved connectivity following completion of the Luas light rail connection project. Although we expect to see a noticeable increase in hotel development commencements and new planning applications in 2016, the reality is that most of this additional hotel accommodation will not be trading until 2018 at the earliest. So the current shortage of hotel rooms will persist for some time yet. According to our research, more than 7,300 rooms could potentially be added to Dublin's hotel market, although most of the new rooms will not be delivered until 2018 or beyond. The capital's first new hotel for many years, a 198-bed Holiday Inn Express, which is due to open in Findlater Place in Dublin 1 in May. However, 182 hotel bedrooms have recently been removed from the market following the closure of the well-known Clyde Court Hotel in Ballsbridge, so the net addition to the city's room stock is marginal. Despite the shortages of accommodation that will prevail in the capital for some time as new hotel projects are delivered, it is vital that hoteliers resist the temptation to raise room rates too much or too quickly, as this will ultimately affect competitiveness and have unwelcome consequences. Development is likely to be predominantly focused in Dublin for the foreseeable future, although we expect to see some planning applications being lodged for extensions to existing hotels and extensive refurbishment projects in various locations around the country as the year progresses. Funding for hotel development is still difficult to obtain, and this is unlikely to improve to any great degree in 2016. Following what was another record year for Irish tourism last year, performance figures for hotels throughout the country have improved considerably, particularly in Dublin. This in turn has led to an improvement in hotel values, a trend that is expected to continue over the course of the next 12 months and encourage a greater number of consensual sales of hotels. An uplift in values of some 10 to 15% in prime locations, such as Dublin, Galway and Cork, is expected over the next 12 months, while more modest growth is anticipated elsewhere. Another strong year for tourism is anticipated in 2016 on the back of an improving domestic economy, heightened consumer confidence and favourable currency movements. Fáilte Ireland are predicting that 8.2 million visitors will travel to Ireland this year, which will be an increase of 4% on the record numbers who travelled here last year. It remains to be seen if US visitor numbers to Ireland will decline this year as a result of geopolitical concerns. In any event, tourism numbers are expected to be boosted by the commemoration of the 100-year anniversary of 1916 and various cultural and sporting events, including the hosting of the Irish Open at the K Club in Kildare and the hosting of the Georgia Tech Boston College American football game in the Aviva Stadium this September. Another busy year is certainly in prospect for this sector, with the first signs of the next phase of new hotel development emerging as the year progresses.